Welcome to the Facts vs. Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese. Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors. And we're back, episode 144, Carson's Facts versus Feelings, Ryan and Sonu. Sonu, funny thing, so last week, you and I were in New York City. We were running around, we did a bunch of stuff. Shout out to the Compound and Friends.
Yeah.
Josh Brown and Michael Badnick for having us on. We'll talk more about that. But a funny thing happened. While I was in New York with you for 2 days, I lost my umbrella, I lost the charger to my laptop, and I lost my company credit card.
And I lost my wallet.
Well, I know what you say that quickly, because I texted him, like, you're not going to believe I forgot all this stuff. Then he texted me Friday morning, you're not going to believe I've lost my wallet. I said, are you serious? So fill us in, Sonu. What happened?
Yeah, I was having, another breakfast meeting. I was like, trying to squeeze one last thing in New York City, like an old school diner thing. And I was trying to get out of the place. You're going to go grab a coffee somewhere else. And I'm like, oh, shoot, I don't have my wallet. Mm-hmm. And I'm like, okay, I'm starting to sweat.
And this is when I'm texting you all the stuff I forgot. Right. Like, we were going back and forth.
I'm starting to sweat. And I'm like, oh, no, I called the hotel. And, now you have to go through like any number of menus to get this, an actual human being to speak with.
You can do that? I didn't even talk to a person anymore.
No. And then I was like, oh, let me call the Uber. Luckily, I took an Uber, not a yellow cab, right?
Right.
I took an Uber. I called the guy. And that's when I almost realized that it struck me, wait a minute, I lost my wallet about 6 months ago, and my wife forced me to get one of those wallets with a tracker in it.
Sure.
So I was like, oh, wait, I have the tracker. So I could see where it is. And I saw it moving around, the Upper East Side of New York. Okay. I called the Uber, and turns out, passenger found it in the back seat, gave it to the guy. There's no cash in there. I never hold cash. He's like, he's asking how much cash in there. I was like, 0. And he's probably thinking, okay, I wonder if it's worth my time to return this, because this guy's not going to give me a tip. But my buddy gave me
good.
Some money, and I gave him a tip. All's well that ends well. I was like, I have to spend the night in New York City, and my wife has to ship my passport to me. And then you tell me about Clear. I was like, maybe I should just get Clear.
At Clear, as long as you've got a pretty face, it scans your face and you get right through.
Or face.
There you go, exactly. But well, I'm glad you found it. Here's the funny thing about my stuff. It turned out my company credit card was in my wallet the whole time. It was just a different area. And the umbrella I thought I lost, I put it in a different compartment. So I'm just
And anyway. You were blaming me for that.
No, I would never. I would never blame you, Sonu. Only if our market calls don't work, then I blame you. But let's get into that. Speaking of trouble, let's start high level with some, I think, a fun one. Mr. Jerome Powell. He's apparently, we know President Trump isn't a big fan. We don't need to get into that. Oh, we can get into that. But now what we're hearing is the Fed apparently is building a $2.5 billion renovation to their headquarters in Washington, D.C. And now the administration, President Trump, are saying, well, this was reckless. He lied to Congress about how much money they're going to spend or what they were going to do. And maybe this is the way they can potentially push him out. I don't even know if they can do that or not. But I'll tell you what, $2.5 billion. I've seen some good stadiums that are like $1 billion. $2.5 billion for the Fed. We need to go check this thing out, because we need to do facts versus feelings from there.
Yes.
They have a retractable roof like those big. Imagine that retractable roof at the Fed like they have for the football games.
They have an FOMC committee. All my goodness. 19 of them are sitting there. It's like, oh, it's a nice day in Washington, D.C. Let's keep the roof open.
Oh, that'd be cool. Anyway, so I don't even know where this is going, but talk to me about the latest trouble Mr. Powell found himself in.
Well, where it's going is he could probably get fired. I mean, you have to say the probability of him getting fired is not 0. By the way, you and I talked about this 2.5 months ago.
We did.
Remember they were talking about, like, can Powell be fired? Everyone's like, no. And at that time, I was like, no, they can fire him for cause.
For cause. Mm-hmm.
Right? And this is a president who imposed, 85, 95, 145% tariffs, saying this is an economic emergency. Even 50% tariffs on copper last week, 50% tariffs on Brazil last week.
Yeah, we'll get into that a little bit more, but yeah, exactly.
This is an economic emergency. So finding cause for him was not a problem. But yeah, like, and now they've clearly found cause. So the question is, do they fire him or not? And I think I would say that it's a 50-50 bet at this point. I don't know. It's not zero. It's not zero probability.
So, Russell Vaught, the OMB director, said Powell, quote unquote, misled Congress. He said that just the other day. And then on Friday, Kevin Haslett, who actually wants Powell's job. This is so many layers. It's fascinating. Yes. He's the National Economic Council director. He said it's a problem of oversight and spending. That's quote unquote. But anyway, those are the couple things I've got. I don't know. I mean, there's a lot of pressure. And then there was some article, I forget who it was, but on Friday they said he's actually leaning on potentially stepping down. Of course, you probably don't want to get fired from the government. If you step down, you get your pension, you get all the good stuff that comes with it. So they'll probably let him step down. I don't know. How much more you want to talk about this, or what else maybe you want to layer on Fed policy and inflation or whatever else about the $2.5 billion renovations. And that's just renovations. You should just start fresh. Just build like a space station or something. I don't know, for $2.5 billion. What else are we talking about with the Fed here?
I'm just going to, you know what? I'm going to go contrary and say, okay, I think he's going to get fired.
Wow. Okay.
I'm going to say, like, I could be totally wrong, but on balance, maybe like 51-49% chance, right? Okay. I think he gets fired. And especially if he doesn't rate, and this gets to the Fed policy aspect of it. He's not going to drop rates in July. And remember, when we were talking about this 2 months back, I was like, I told you at the time that they're not going to do anything in May. Right. The pressure is going to increase. Trump's going to be mad at him. You said this, and they're not going to cut rates in June. Trump's going to be even madder. And now they found cause. What do you think happens after July when he refuses to reduce rates again? And if September comes by and they don't drop rates, and I don't think it's a sure shot bet that rates go down, that they drop rates in September. We can talk about the CPI report and all that. Yeah. But yeah, I think the pressure is going to increase, and Trump's going to be like, wait, this guy may not drop rates all the way until 2026. I need to get him out of here. Period. Yeah. Well, we got the two Kevins, right? Kevin Haslett, Kevin Warsh, obviously. Treasury Secretary Vicente is in there. There's a lot of people are potentially trying to get this job. Well, let's change gears. Let me hold on. I get choked up talking about this. By the way, Kevin Haslett. Kevin Haslett was the guy. He wasn't even. Oh, it's Haslett, not Haslett. I'm an NFL fan. I think they're Coach Haslett. That's probably, I can't read my own writing anyway. But yeah. Kevin Haslett was the guy. I think it was 99 or 2000 when he wrote the Dow 40,000. Oh, the book. That was him. That was him. Yeah. Oh, he had somebody else. He's like, yes. Oh, so he was well, the Dow is what? It's 45, 46. Well, I mean, I don't know where it is now. Above 40 now. Yes. Yeah. Let's see here. So let's go inflation. Let's go inflation. So we are recording this on Tuesday morning, 15th, middle of the month, middle of June 15th. The CPI number came out. By the time most people listen to this, we'll probably have the PPI number. But at least on the surface, Sonu, you had a little bit of time to dig in. It didn't appear we're seeing any major spikes in inflation yet due to tariffs, right? Yeah. So tariffs are having an impact. Okay. Right. But you'd have to know where to look. And it's having an impact in the most obvious places. Now, the good news is that shelter disinflation is covering it all. Yes. Right? And used car prices. Remember, a year ago, 2 years ago, what was the problem? We were talking about, inflation's normalized, but it's because of lagged shelter data and used car prices, all sorts of, nonsense on that side that was happening because of how these things are measured, right? That was it. It wasn't like the reality of the ground. And now, this year, that's come to help. Right. So headline inflation was up 0. I should say that inflation numbers were better than expected, but it's not like soft. Okay. Right. And but let's get into it. Right. So headline inflation up 0.3%, up 2.6% year over year. Just by that, you'd say, okay, it's still above the Fed's target. But I think the 2.6 year over year, a lot of it is still coming from lagged shelter. The good news is, as I said, shelter. If you look at hit time out just for a second. I'm sure you have at least one inflation chart. So, David, on the YouTube channel, we'll toss in an inflation chart right now. There you go. Talk about that inflation chart that we're going to make up on the YouTube channel now, Sonu. Exactly. So, and core inflation, which is actually the Fed cares about the personal consumption price index as opposed to the CPI. We can talk about the difference between that. But core was up 0.23% along expectations, right? Expectations are slightly 0.3%, but that's a rounding thing. Core inflation's up 2.9% year over year. That is a big picture. The target is 2%. So what's pulling things lower and what's pulling things up? Well, what's pulling things lower, as I said, it's shelter. And now two things. This gets to something we talked about in the compound, right? Josh brought up the fact that, Vegas is not seeing, Vegas is not seeing a lot of activity. You were there. You said the same thing, too, that you didn't see a lot of Vegas style type of activity that you normally would, right?
No, we were in Vegas early April, just a couple of months ago, and I remember being in Vegas a couple of years before for Carson's Excel, right? Our big conference we have with our partners. And I remember how crazy it was then. It didn't feel the same, and I was there over spring break. But there's different ways to look at this. I mean, not advocating for gambling, but you can just gamble on your phone. All right. And you look at these numbers. I mean, people don't really get together as much as they did. People don't drink as much as they once did. I mean, there are some of the social aspects of Vegas that are, I don't know if they're headwinds, but I don't think it's shocking that it's not quite booming as much as it once was. I mean, still
and
fun
we talked
place.
About travel.
I still had fun. I still had some good meals out there. But yeah, go ahead with travel. Yeah.
Yeah. And we talked about like a big chunk of it is probably international travelers not coming to Vegas, right? Even at the margin, that has an impact. And to that point, let's talk about travel within CPI, right? If travel demand is lower, what would you expect? You would expect prices to be down. You would expect hotel prices to be down, and that's exactly what we are seeing.
Right.
Airline fares were down 0.1%, not much, but still, it's a third straight month of decline. Hotels and motels prices were down 3.6%. That's a lot for just 1 month, by the way, 3.6%.
Yeah.
And that's also the third straight month of a decline. So that tells you that there's a softer demand story here, right? And then you think, okay, where would tariffs show up? Right? Tariffs, the most obvious places would be household goods, right? Appliances, things like that. If you're going and buying a toaster or whatever. So appliances are up to almost 2% in June, right? 2%. If you think of annualizing that, you get a ridiculous number like over 20%, right? So 2% is a lot. Household goods overall were up 1% in June. So that's where you're seeing the tariff impact. But what's pulling that overall core goods inflation lower? Vehicle prices, right? And this is a puzzle for me. Like, I don't know what to make of this. Used car prices were down 0.7%.
Right.
Third straight month of lower prices. Even new vehicle prices, Ryan, were down 0.4%. Or maybe I should go out and buy a car now. So this is a puzzle. I don't know. Are car prices coming down because demand is weak, like we just talked about hotels and airfares? Right. Or is it because some weird thing in the data? I'm guessing it's some weird thing in the data. Because you and I we look at the Manheim used car price index, or the auction price index, or private data. Over the last 4 months, that index is up 2%. And that's about 6 to 7% annualized pace. So that's pretty hot. But if you look at CPI of used cars, that's down 2.4%. That's about negative 7% annualized. So I think it's a data problem. I think so. There's, as usual, weird stuff going on in how things are measured in the official inflation data. I don't think it's a problem of weak demand. But anyway, that's where we are at.
No, it's good stuff. I mean, I did see also car insurance up 0.1% after being up 0.7 in May. Remember, it wasn't that long ago, car insurance was soaring, and that was a big potential part. Like I said, new vehicles down 0.3% and used down 0.7. So all in all, I put it this way. About an hour. Well, the market's been trading for about 40 minutes or so. Time we're recording this, kind of flat. Nothing really happening. So taking this inflation data really in stride, I think, is what I would say.
And I think there are two things that worry me a little bit, and part of it gets back to what you and I talked with Skanda Amarnath of Employ America. Remember, he was asking us, have your guys' electricity bills gone up?
Yeah, true.
Right? And, well, you're in Ohio. I'm in Illinois. So there's this thing called the PJM region, which is a regional transmission organization. It manages basically electricity, wholesale electricity auctions, things like that, for a big chunk of the eastern United States, right? You're talking about New Jersey, Ohio, Pennsylvania, Indiana, Michigan, Virginia, Maryland, Kentucky, all of this. As of June, prices are up 29-30%. This is the expected increase in electricity prices. So brace for that, right? Now, we won't see it all in 1 month because the states are going to say, no, you can't, charge Ryan and Sonu, charge them 30% more for electricity. You have to modulate that. But we are seeing that in the CPI data. over the last 3 months, CPI, electricity prices, so this means gas and electricity bills, that's up 12% annualized pace. Over the last year, it's up 6% year over year. So there's momentum, there's a pickup there. Part of it, the big story is there's not enough supply and there's a lot of demand, especially from AI, right? So
I was going to say, is that an AI theme?
I think that's an AI thing. Remember, yesterday morning, you and I were on a call and we were talking about, markets running. Even Josh talked about it on Compound last week. Like, hey, markets are going up. It's all AI. Mm-hmm. And I'm like, to get that AI story, I don't look at tech anymore. I look at utilities.
Yeah.
Utilities are up. The utilities sector is not what you would expect to be up, when markets are at all-time highs. Right?
It's not your grandfather's utility industry anymore.
Right. And
now, the other side, crude oil. I mean, the other side, the crude oil is lower. Yeah. I mean, so we've got that side of things, right? So I hear what you're saying. There's some yin and some yang, and maybe you get some higher prices because of potentially tariffs, but then you do have shelter, which still is probably going to improve. So you can tell any story you want. It feels like to me, Sonu. Is that kind of how it maybe is?
No, exactly. And what's interesting is like gasoline prices are more or less, they're lower relative to last year. It's kind of flat this year. It's not too bad. And remember, incomes are still going up. It's just not going up as much as they were 2 years ago, which is why I think the Fed is tight. Diesel prices, right? And this is the other piece of what I look at. I always talk about, like, with inflation, look at full service meals and snacks. You and I going out to eat, for example, in a restaurant.
We do our very best research. What time out for a second. What was your favorite meal in New York? Did you have a favorite when we were there? We had like 4 or 5 meals. What did you think?
I like the Hunt and Fish Club that we went to. That evening.
Hunt and Fish was very nice. The Italian place, Tony DiNapola, Tony something. That I like that. I got that big chicken parm, enormous. I said, give me the lunch portion. Thank goodness they didn't give us the big. So I only ate half of it. We had stuff to do.
I must say that veal piccata that I had was very good.
Yeah,
I'm a fan of lemon.
We walked out of the restaurant, looked up, and right there was the debt clock. Like right there, we didn't know it was there. Right there, so we did a quick video, did a couple of pictures of right in front of the debt clock. That
was hilarious. That I must say that was a highlight for me. I'm sure you and I are going to use that picture any number of times over the next 2 years.
Yes. Every time people ask us about debt. I hijacked you, Sonu. You were talking about something. What was it? Meals.
Yeah, so if I'm looking at underlying inflation, like, is underlying inflation hot or is it not? Right? Okay. Look at full service meals and snacks. And last year, we were on record saying inflation's no longer a problem. And that's part of that was I was looking at full service meals and snacks. That was coming down. That was heading towards, like, let's say, a normal level of 3% year over year, 3% increase, right? And I look at that because it brings in several different pieces of underlying, what drives inflation. Worker wages, right? Because you have to pay restaurant workers, restaurant rents, premises rents, things like that, and then food prices, right? Over the last 2-3 months, these prices have been going up. Restaurant meals prices have been going up. And it's up about 4% year over year. In fact, over the last 3 months, it's up 6% annualized pace, right? Now, this is also a bit of a puzzle for me. I know it's not because of worker wages, because we have data showing worker wages are not going up. It's actually it's easing. Wage growth is softening. Rents are also not spiking, right? We know rents are also easing, which means food prices are going up. What's driving up food prices? I think there's some supply issues. Meat prices are higher. And the other thing is diesel prices, right? So gas prices are kind of okay, but diesel prices are at their highest level since last August. Electricity prices are up. I think all of this is what's driving food prices and generally restaurant meal prices higher too. So something I'm keeping an eye on, that and electricity prices. It's all tied together though.
I just Torsten Slock, he sends a daily email. He sent one just today, and it said something like,
how do you get on that list?
Oh, I don't know. I guess it's
a special guy. I need to get on that list.
I swear it's free. You got to know somebody. I'm going by memory here because I can't seem to find it now, but I know I had it. It said, you know what? It's probably this email. Well, maybe I don't have it there either. Something like 75% of all the food sold at a restaurant is like carry out anymore. Like only 25% of all the food they're selling is actually sit down restaurants.
That's me.
Kind of, which is kind of crazy. But then again, I think of our family, my goodness, yes, anyway. So that's something along the lines there too. All right, so let's move forward. So we've got a lot to talk about here. When we were in New York last week, that ran around this in media, the big talk of the town was Nvidia hit $4 trillion market cap. And, I mean, just think back to late February, the DeepSeek worries, right? Oh, my goodness, China's got this really cheap version of AI that's just going to crush all these big companies. And now all those big companies that were, hammered. I mean, you talk about utilities. I mean, some of the utility stocks are down more than 20% the day
more
after
than Nvidia, right?
Yeah. Oh, yeah. The day after that happened or all that came out. Congrats to our buddy Dan Ives. I mean, Dan was literally maybe the only person out there saying, no. They're going to come back to new highs this year. I didn't think they were either. I mean, it was pretty much a bloodbath after that. But here we are, and now this talk, I guess it's official, I believe, that NVIDIA is going to be allowed to sell their H20 GPU chips back in China. So maybe that was sniffed out as well. I had a couple. I thought interesting.
They're up. NVIDIA today, July 15th.
Yeah, what's it up now?
If they're recording 4%.
Is that $5 trillion yet? I'm teasing.
Maybe.
So here's just a couple things, Sonu, I want you to jump in. They took a they being NVIDIA, $4.5 billion write-down in the first quarter due to the fact they couldn't sell these chips in China. And it came out to a $2.5 billion loss in overall Chinese sales. Now there's rumors, there's talks, who knows, that there could be a deal in play with China, a chips for rare earth deal potentially coming. I think my take is it's just maybe a little more thawing, if you will, between U.S. and China relations. I'll take it as a positive. Sonu, how does this NVIDIA deal with U.S. and China trade? Talk to me about how it all connects.
I didn't hear. I didn't know about that. That's interesting. That's
which one?
The rare earth deal for NVIDIA chips.
I saw it somewhere this morning. I don't know. I slept at Holiday Inn Express. Maybe I just made it up myself. Okay, no, I swear I saw that somewhere. Yeah.
I'm trying to think through because 4 months ago we were getting rare earths from China.
We were,
and China wasn't getting chips, right?
Right.
So keep that as a baseline.
Okay.
And today, we're apparently with this latest news, NVIDIA can sell their H20 GPUs. So this is a less powerful version of their Hopper chips, right? This is what I'm reading. I'm like, don't ask me more than that. Right?
We'll stop there. That's always pretty smart.
We know where to stop. That's one way to think about it. But yeah, so they can sell that to China. And now they restart rare earth sales. Mm-hmm. Right? So I'm like, wait a minute. Like, China, it looks like China comes out the winner. They stop rare earth sales to the U.S. They say, no, we're not going to restart that unless we get the chips. And now they got the chips, and now they got to stop rare earth sales. So anyway.
Well, also chime in. China yesterday, the GDP numbers came out, and again, I mean, take it with a grain of salt. We don't always trust Chinese data, but 5.2% GDP second quarter, pretty solid. And they said exports actually pretty darn strong too, even with all these tariffs. So again, what do we think about U.S. and China trade relations here?
Same as ever.
Mm-hmm. Yeah, okay.
Same as ever.
Clear as mud.
I mean, what's amazing, just like you've said this nicely, like every earnings season, the only surprise should be that NVIDIA surprises. It shouldn't be a surprise.
Well, the quote I use here. Let me jump in. I've used this quote probably for 6 quarters in a row, 7 quarters in a row. So media, here it is. Death, taxes, and NVIDIA beats on earnings are 3 things that you can you almost guarantee. Yeah, go ahead.
Yeah. And I'll add a fourth to that, Chinese exports. Right?
That's I'm never going to say that. That doesn't sound like something I'd say.
But look, every month we get the data. There's trade war, trade chaos, all of it. Every single month, what happens is Chinese trade data comes out and their exports keep going up. Right? In June, their exports are up close to 6% year over year. And by the way, yes, exports to the U.S. are down about 16% year over year. And on a year-to-date basis, right? First 6 months of this year relative to the first 6 months of last year, it's down 11%. But they're making it up more than making it up everywhere else in the world. They're exporting to the EU. Exports to the EU are up 8% year over year. Exports to Southeast Asia, countries like Vietnam, Philippines, Singapore, Thailand, things like that, up 17% year over year. Even India, exports in China to India is up 9% year over year.
Wow.
So despite all of this chaos, what's happening is that China's exporting more and more. And by the way, they're not exporting just toys and dolls and things like that, right? They're exporting like high-end manufactured goods. We're talking about, biotech, pharma, solar, batteries, robotics, telecom, chips, things like that. All of this, and especially EVs, right? China, here's one last stat on that.
Okay.
Their car exports are edging towards 7 million per year.
Oh, yeah.
5 years ago, you know where that number is? About
I was going to say less than 1 million.
Less than 1 million.
Yeah, I think I've heard you say that.
Yeah, less than 1 million 5 years ago. That's crazy. Wow.
And how much of that's EV? How much of that is EV? Like a lot of it, or do we know that exactly?
No, a good chunk of it. So it's about 2 million.
Right. Okay.
2 million or so.
Right.
Probably. Right. And they have the capacity to produce half the demand for vehicles across the world at this point. Right? Normal demand for vehicles every year is about, let's say, 85, 90 million cars. China can produce 50 to 60 million cars right now. That's crazy. And this is all new.
Yeah, last 5 years. Yeah.
It didn't exist 5-6 years ago. That is insane to think. And they are just pumping the stuff out to the rest of the world. I was in Mexico a few months back. Everywhere it's like Chinese EVs, BYDs, Xiaomi. It's crazy that, when we talked to Dan Ives, I asked him, like, why couldn't Apple figure out how to put wheels on an iPhone? And all these Chinese companies figured it out, right? Like, but anyway, that's a China story. They're doing okay.
Yeah, no, exactly. And honestly, from a global point of view, U.S. and China, two biggest names out there, I guess we could say. EU, big entity as well. But the U.S. and China economies, hey, doing all right. Which, by the way, last week we released our mid-year outlook. The Carson Investment Research Mid-Year Outlook. You can go to carsongroup.com/outlook to check it out. We really broke down our views in the second half of the year last week. And if you followed along on this podcast, which we know a lot of you do, by the way, last week we've had huge downloads. We can specifically thank our friends at the Compound and Friends because we have a lot of new listeners. So actually, I should be thanking a lot of our new listeners. Hopefully we don't scare them away too quickly. But a lot of people gave a lot of positive, nice comments about some of my discussion at the Compound.
Thank you
all the new listeners. Yep. Yes, thank you. A couple. Let's kind of rip through some things here. There is some good news out there, right? Delta and Levi Strauss both had earnings already. Delta said it was a record quarter. Delta also, Sonu, remember last quarter they said, hey, no guidance. We don't know what to tell you because it's too uncertain. They brought back guidance and actually had a little higher than what was expected. Now, kind of a concept we talk about with Josh, the K-shaped economy. Delta said, hey, we're selling a lot of seats in the front. We're not selling so many seats in the back. So that is still there. Reality, though, I traveled. Planes look pretty darn full to me. Then Levi Strauss came out and said, hey, record profit margins, strong earnings. I think Levi was up 12%. Delta was up 13%.
Or maybe are you in front of the plane?
Sometimes I get upgraded. Sometimes I get upgraded.
It's more crowded there. And they said that, right? Business class and all of that is, and it gets back to
those first class seats are pretty nice though. There's a few good feelings in the world when you get that email alert or buzz on your phone. You got first class. Totally. So anyway, so Levi said they weren't having too many big problems with tariffs yet. They said, hey, we weren't giving as many deals as we once were, so the consumer has to pay for some of it. But they also said we're actually going to foot some of the higher costs too. So all in all, it's super duper early. But if you look at Levi's, look at Delta. Things are okay so far this earnings season and with the economy. What else you want to add here, Sonu?
Yeah, I think it gets back to who's paying the tariffs. And so far, we know it's somebody in the U.S. And by the way, the U.S. is raking in a lot of money in terms of tariffs, right? Like
100 billion or something? What was it?
100 billion year to date. Okay. And compare that
and what did we get last year? Like, I'm jumping in. What did we get last year on tariffs?
47 billion.
So we doubled it, and it's half the year. Okay.
Yeah, right. It's about half the year. It'll probably increase. So the question is, who's paying, right? Is it foreign exporters? We know that's not the case because otherwise import prices will be going down. Import prices are kind of flat, if not slightly higher in some places. So it's U.S. businesses and consumers. And we are just starting to see it, like I mentioned, with core goods and appliances, household goods, things like that. You're starting to see some of that impact, right? Okay. I think overall, we still have shelter inflation, used car inflation for whatever reason, pulling headline numbers slightly lower than it would be. But so far, look, there are a few reasons why we shouldn't see tariff increases just yet in the data. Okay. One is, look, the tariff increases went into effect in April, right? The big increases. Yeah. And Then you think about, okay, goods shipped from Asia to the US, especially Asia to the US. I mean, goods come from around the world, but especially over the Pacific, it takes about a month, right? And goods that were already shipped before the tariffs went into effect were exempt from the tariffs, right? So in reality, the big tariffs would have begun to hit, only in mid-May or something like that, right? So, and that shouldn't show up in price increases until June, July, August. The second part is U.S. Customs and Border Protection allows importers who use something called the automatic payment transfer system. They can delay tariff payments for up to the 15th of the following month. So even if the big tariff increases went forth in, by May, they wouldn't have had to pay it until mid-June, right? Again, that's not something that would show up in the June inflation data. It may show up in July. And then the third thing is companies. We know from, remember the GDP data in Q1?
I mean, how could I forget? It was so exciting. It was so exciting.
Yes, exactly. So imports went up, right? Imports surged.
People bought a lot of stuff ahead of time because they knew prices might jump. Yeah.
And companies front ran the tariffs. They built up inventories. So the goods that are currently being sold are probably not tariffed at those higher rates. Okay. Right. But then I think, look, they can't keep inventories for more than a month, 2 months, 3 months. At some point, they were like, okay, we need to start bringing stuff from abroad again. And those are going to see tariff increases. I mean, I've talked to a friend of mine who leads global procurement for one of the largest importers in the US. I can't mention names, but he's like, yeah, for now, we're eating up the cost. And they didn't have 3 months of inventory. They had about 1 month. They're like, it's too expensive to keep that much inventory, right? Whatever it is. But from August 1st and onwards, they're like, we're going to pass on the costs, right? Now, that's not going to show up in the data until like September. Yeah. And which is why I don't think it's a sure shot fact that we will get a rate cut in September yet. I think Jackson Hole, Powell's speech, unless he's fired by then, who knows? Maybe it's Kevin Hassett's speech in Jackson Hole. But yeah, I think that's going to be key. We'll find out.
We could ask AI, has there ever been a Fed chairperson fired? I don't know. Maybe we could look into that. I don't know. I don't know.
Sure, you keep talking. I'll ask.
You can look. Yeah. So we did have some good news again out there. Let's talk about good news. We talked about some things. I am sure a lot of people watch HBO out there. So there was a time it was called HBO. Then there was a time it was called HBO Max. And then they made the bonehead decision of all bonehead decisions to call it Max. I didn't understand it. Everyone hated it. I'm not a marketing person. Sometimes I think I can do marketing. I'm like, okay, that's really not smart. Just this week, they've officially gone back to HBO Max. So they brought HBO back in the name. So there's proof anything can happen. Even stupid things can get fixed. But that was, I don't know, whoever came up with that idea.
It was like they changed marketing firms every so often. And every time a new marketing firm came in, we're going to change it. Because we have to do something.
They want to get their fingerprints on it, want to do it. So let's take away the crown jewel that we're known by and take it out of the name. And then Max, this thing's like Cinemax. And I know HBO got Cinemax. I don't understand all the weeds of it, but the reality is at least that came back. One more thing while you're looking at that. Big Black Sabbath fan, Ozzy Osbourne, grew up listening to that music. And they just had that final concert over in England where a bunch of bands came in. Ozzy sitting on a throne singing, I think 6 or 7 songs, and a bunch of other bands came to honor them, so that was really cool.
So I had a surprise for you. Shoot, I forgot. Next week. We'll do it next week.
Now it's not a surprise. Now I know something's coming.
But something's coming, but it will be a surprise.
I will say this. I know you like Aerosmith. I thought Steven Tyler stole the whole thing. I mean, he hadn't done anything. He had voice issues and he had some substance issues, different issues. But Steven Tyler came out there and he sang a Led Zeppelin song. I forget which one, but I mean, you've heard it. We all heard this song. It was Steven Tyler totally stole the show, I thought, at this thing, because mainly you didn't even know the guy was still around. Then he comes out there and it's like, wow, maybe he might start touring again because he had this throat surgery. Apparently he's back. But you're an Aerosmith fan, right? You like Aerosmith?
And speaking of, you mentioned Led Zeppelin. On the flight to New York, I watched 2 movies. One was a Led Zeppelin documentary.
Well, there we go. Okay, you must like Led Zeppelin then if you watched the documentary. All right.
And that was great. I highly recommend that. Right? It goes back to the early days, how they were formed, things like that. The first couple of albums, really. And then I watched Speed. Remember that from the 90s?
Yes.
That was wild. I finished the movie on my trip back, and it was, I should do that more often. And I want to travel, if I just want to relax, pull up a movie from the 90s, like, your Speed and Con Air and The Rock and all of that. They don't make movies like that anymore.
Yeah. No, they don't make movies like The Rock. I remember that movie was just the most ridiculous movie of all time. Ed Harris. Oh my goodness, that was great. That was good. That was good.
So there's a playlist for you for those of you listening next time, you're in an airplane, you're looking to relax, throw up Speed. I mean, you can't go wrong. That's so cool.
There you go. Let's see here. So we're kind of near the end. Did you find out if any Fed chairpersons have been fired? Or what'd you find there?
No Federal Reserve chair has ever been fired during that term. The closest examples was William Miller in 78-79. He was appointed by Carter, but after less than 2 years, Carter moved him to Treasury Secretary. So, and then Volcker was reappointed, by Reagan once, but then after his second term, he was replaced.
Okay.
And ChatGPT says, not because of poor performance, but likely for political and ideological alignment reasons, right?
Okay.
And now it's Jerome Powell.
Well, I mean, Volcker literally pushed us into a recession, like the double dip recession, hiked interest rates to break the back of inflation. And I could only imagine like now he's kind of revered. 6'7" Jerome Volcker. He killed inflation, slayed inflation, led to the 80s and 90s boom potentially. Just imagine how much President Trump would hate him. Oh my goodness.
Oh, he'd be fired. He'd be gone yesterday.
Oh my goodness. That'd be
he'd be gone yesterday.
Yeah, get your popcorn for that. If you want to hear the latest from us, don't forget to subscribe to our podcast. You can also leave us a review. We love everybody's feedback. Helps with those algorithms that are out there, likes and follows and those things. Also, Facts versus Feelings, Facts versus Feelings at carsongroup.com. Shoot us an email. So, Sonu, we are kind of near the end. I just wanted to do a couple market things while I have everybody's attention.
And you wrote a blog. The blog that we write on is carsongroup.com/research, right?
Yes. And I've got some stuff there. Oh, who's calling me here? Oh, great. That's a lawyer. So my brother passed away and we're still dealing with stuff and the lawyer's calling me. I don't want to answer that phone call. I mean, it's amazing. It really, we talk markets, but this is why you need an advisor. It's why you need good lawyers. It's why you need good accountants. We're in pretty good shape with all this stuff, but
why do you need to plan, right?
Early. Why you need to plan. It is, I mean, trust me, my brother, we didn't expect him to pass away as quickly as he did. I mean that young as he did also, but it happens. I mean, that's reality. It happens. And that's why, again, using a place like carsongroup.com, check us out. If you need a good advisor, you need some good planners, someone to help you for when real life hits you. Like when you get these calls like this lawyer, I can only imagine. You know what? I'll bet I know what it is. Last week, he mailed me some stuff I had to sign and get back to him. I haven't done it yet because I was in New York. And this guy's a real stickler. Like, he's like, right, give me the stuff. I'll bet that's what it is. I got to tell him, oh, sorry, I was in New York with Sonu hanging out. Anyway, all right, let's wrap this up.
Get on that DocuSign.
Exactly. Right. Well, this one apparently has to be I use DocuSign sometimes, but this one apparently, because it's wills and stuff, you can't use DocuSign. I don't understand it. I just do what they tell me. Anyway, so we were remember at the beginning of May, we were told how bad everything was. There was a cover of, I'm a huge fan of Barron's, to be very clear. I think Barron's has been very, very right relative to so many other magazines. But the Barron's Big Money poll, that's real money managers, they asked, what do you think? They had the least number of bulls in 30 years, less than a 100-year pandemic, less than the GFC, less than 2022. This is, again, money managers, what they had to say. And the title was, where'd all the bulls go? Sonu, the months of May and June just gained more than 11%, the greatest 2-month rally in the history of the months of May and June, after we were asking where all the bulls went in late April. Now, when you are higher those 2 months and when the S&P gains at least 5% those 2 months, we will share this chart right now, David. But the final 6 months of the year, dude, that's pretty good. Up 5.6% average, 7.4% median. A year later, things even better. 13% average, up over 15% median. Just some things to think about, that the strength that we've just seen these 2 years is not all that consistent with history, because normally you're not that strong these 2 months, but it happened. The other one I want to point out real quickly here, S&P up 26% in 3 months off those April 8th lows. That's one of the greatest 3-month rallies we've ever seen in the history of the stock market. Again, we'll share this one also on the YouTube channel right now. Coming off the lows in 75, coming off the lows in 82, early 1999, off the lows in 2009, and off the lows of 2020, and right now. Think back to all those times. 3 months later, never lower. 6 months later, never lower. 1 year later, never lower, with some really, really solid returns. We don't know if a year from now, 21% on average like this previous 5, but I do know this. All 5 of those times, stocks were up double digits at least a year later. These are some building blocks, what we talked about last week. Momentum's a wonderful thing. It kind of works both ways. But the truth, again, is the strength we've seen the last 3 months with some of the economic things and inflation and all this stuff all swirled up together. We're still overweight equities. We still think this is a bull market. We still think the second half of the year will be pretty good. Sonu, I do have to go get my boys here in a minute or two. Well, how do you want to wrap up this week's Facts versus Feelings?
For somebody who looks at a lot of the macroeconomic data, fundamentals, policy, ultimately, if I had to pick one thing to see what to expect from markets, I would look at momentum. And right now we have that.
Yeah.
That's how I'd underline it.
No, I think we do have some momentum. That is.
Speaking of somebody, for all the listeners, this is a surprise for me that. So I did get to go to my first CMT, Chartered Market Technician event in New York. Thanks to Ryan and Jay Woods for having me out there. Met some great folks. Sam Rowe, Larry Tetarelli, all of them. Phil Rosen was there.
Frank Capillari, our buddy Frank
Capillari. Yes. Yeah, so it was a great event. But what was shocking was
Mr.
that
Hirsch, Almanac Trader.
Shout out to
I always have the book. Where is it? Where's Jeff? I guess I don't have the book next to me. Sorry, Jeff. Usually I've got my Almanac Trader book. I just always glance at it. What's going on historically? Maybe it's over there.
Shout out to Jeff as well. It was awesome meeting him. What was shocking to me for all the listeners out there, here's a CMT event where you expect to see only price charts of anything and everything. And here Ryan puts up charts on household balance sheets and all of that, which is funny as well. So anyway, there's still hope that Ryan does, some fundamental stuff. No, you do. But,
I was up there.
That was a great event.
In front of a room full of technicians talking about Sonu's fundamental charts. And I got Sam Rowe in the back screaming, fundamentals. You had to have been there. It was pretty funny. But anyway, all right. So with all of that, we need to wrap things up. This was, again, episode 144, Carson's Facts versus Feelings. Ryan and Sonu, again, one big thanks. Virtual hug to our friends, Josh Brown and Michael Batnick, again, for having us on. Actually, hold on one second. Let me get hopefully you can see this. I'll show you what on the screen. Okay. You know what I'm about to show. Where is my? There it is. Here. You see this only on YouTube, but they gave us a towel for the summer. I'll just hold this up here. Hopefully you can see that.
Look at that. That's nice.
You see that? Can you read it? Yeah. Okay.
Yeah, the compound.
Yeah, the compound. They gave us a nice towel, so that was really cool. So, nice. But again, thank you to all the new listeners. Hope you stick around, and thank you to all the listeners who've been here the whole time. This is episode 144. We'll be back next week. Do it again. Who knows? Maybe Powell will be fired by then. Who knows? We'll talk about it if it happens. So, all right, everybody, have a great week. We'll see everyone soon. Enjoy the new highs. Take care. Bye-bye. Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM, LLC, or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM, LLC.